Welcome to the edge, y'all. What's the edge? An edge is you. How much are you willing to wait? How much are you willing to blame everything on you? How much do you want to be a victim of everything else besides just admitting that you are the problem? Besides just admitting that you want to grow, that you want to change that. Listen, the problem is how you become a problem. It's when your friends, everybody you grew up around, everybody that, not everybody, but most people that you grew up around are doing the same thing that you used to do. You become the problem when you decide to change from doing what you've been doing for 18 years. You decide to be different. So many people want to be perfect about trading. They want to be perfect. People that's perfect, they're perfectionists. And they're usually not interested in being wrong. But the smartest person in the room, it's not the person who knows the most. It's the person who can admit that they are wrong first. Number one. And it's only one number one. It's only 1 0. It's only one number two, one number three. It ain't no ties. We don't do ties, bro. We ain't here to be tied. The edge is simple. A continuation of reversals. Whoa. A continuation of bearish. A continuation of bullish. A reversal of bullish. A reversal of bearish. And when you look at it, it's like the edge is you. Been able to have discernment. Been able to just stick to one fucking system. Been able to stick to one system. I said it twice because sometimes I say it with a cuss word. The other time I say it with no cuss word, and it made me feel better about myself. Because I don't have to cuss to get my point across. And they say smart people cuss. I don't like being called smart. I don't like being called intelligent. I understand patterns. I understand self. That's it. The edge is you. Acting on the right things. Limiting your decisions. Listen. You can make over 3,000 decisions in a single 30-minute increment. Yep. You can make over 3,000 decisions in a single 30-minute increment. Meaning, you can make over 3,000 decisions in 30 minutes. Meaning, you focus on being perfect, indicators, trade, perfectionism, not want to be wrong. Remember, it's 3 sides of risk takers. Number 1, not risking at all. Number 2, risking not to lose. Number 3, risking to win. Which one are you? You got to sit down with self and understand which one are you. You got to sit down with self and understand, damn, is it this outside thing holding me back? Or is it me? Let's get to the fucking templates. Let's get to the templates. And you know, one more thing. So many people focus on win rates. So many people focus on every single day been a winning day. Or better yet, every single trade been a winning trade. You want me to be your mentor? Understand what a mentor is. A mentor is somebody that you want to be like. And when it comes to you simply saying, well, hold on, what type of wrong am I? Am I wrong on following everything I had to do? Or am I wrong on what I felt that the market was going to do? Those reversal trades, I'll keep it G. Them was giving me 10x. 10x. Meaning, I'm risking $1 to make 10. $100, 1,000. 1,000, 10,000, 100,000, $1, $10. 10x. The edge. You gotta really have discernment. You have to really be willing to step away. You have to really be willing to miss out on everything that isn't as perfect as it can be. Because we follow the system so well. Your broker, your prop firm, your journal, Trezilla, everything gonna say, hey, they gonna ask you, hey, are you bot trading? And you gonna be like, bot trading? No, I'm not bot trading. I'm on here 30 minutes, 60 minutes at max. 90 minutes trading, 90 minutes learning. What is the edge? The edge is something that tells you who you are. You have continuations, meaning the market broke out, it came back to retest, same area it broke out of, and then it said, nah, you used to be a ceiling I could get above, but now you a floor I can't get below. You used to be a floor I couldn't get below, but now you a ceiling I can't get above. Now let's really get to the charts. Heads and tails. When you think that a coin only has heads and tails, you will look at the market as if it's 50% chance, as if it's gambling, right? You see that the market only goes up and the market only goes down. But when we look at a coin, it's something about the edge of the coin that makes it a lot more like heads, tails. When you flip a coin and it rolls, it always land and bounce off the edge before it pick its side. The edge is the most important part because you're sitting and you're waiting for 99% of the time. And when you're able to sit and wait, this edge will help you box all of the noise, all of the uncertainty, and all of the doubt. The edge, why this works, when others don't. Clean charts, no indicators, no noise. When you get on a new charting platform the first thing you do is remove all of the information that you don't know. Remove everything off the chart that you don't understand. Because if you don't understand it, you're going to try to make yourself understand it. And remember, it's 3 things to learning. Learning about it, learning how to do it, and then actually going out and doing it. No indicators. We're not trying to be perfect. We are trying to be precise. No noise. We box the noise. We like to box the noise, right? This is noise. An edge is not indicators, which is trying to be perfect. Predictions, which is most people trading on a laptop and they say, hey, I'm a full-time trader. Listen, we on the charts maybe 30 minutes a day, 90 minutes max. 2 hours is like pushing it. That's like we probably just chatting at this point. Signals, we ain't even gonna talk about signals. Signals are good, but it's different things, right? You want to do signals because you focus on time in the market when you could just be an investor and invest on the long term. Because now you'll be able to catch all of the swings and you're not getting in, getting out, getting in, getting out, you know? Being right every time, that defeats the whole purpose of trading. Trading helps you grow. If it's not omnipresent, it's not an edge. What an edge really is, you waiting. 99% of it is waiting. That's why 92% of people fail. 4% of people give up. They misunderstand the whole point of waiting. The 4 people that's left, 2 of them do mediocre numbers. The last person do 10K and the last person do 100K days. Which one do you want to be? An edge is doing the same thing better, but longer. If it took you 50 words to describe something and now it takes you 10, you got 4 times faster. The CBE edge. We buy and we sell the exact same way. We buy the same way we sell and we sell the same way we buy. We don't do anything different. And that's the difference of it. The difference of an edge and speculative buying. When you're speculative buying, you're only really going based off of an investor mindset, meaning that you only buy. The buys is pretty much, you make your profits on the buys how you think as an investor. But you forgot you traded on 5-minute, 1-hour charts, 1-minute charts. So that turns into what? It turns into, it ain't just about your buy no more. The market, you can make a 20x target on a 1-minute chart and you can be on a daily and it's choppy and you still just made 2,000%. Because the market went up and down so many times on lower time frames. We buy the same way we sell, and we sell the same way we buy. We don't predict, we wait. Because it only takes 1 second to enter for a trade. It only takes 1 second to exit for a trade. You just clicking a button, literally. Bullish reversal. A bullish reversal is the start of an uptrend. When you get a bullish reversal, it reminds you of something impulsive. The bulls are looking for attention, buyers are looking for attention, and the bears, the sellers are so strong right now, the buyers have to do something so impulsive that it's like, yeah, we here right now. You will see super huge candles like this, right? It's like bulls running up a hill blindly. Let's look at a video. Boom, we had build up, build up, build up. Boom, we had a crazy drop off. And then look, this is bulls running up the hill. Something stupid impulsive. Like, where did this come from? And remember, in the market, it's always an exchange between buyers and sellers. Seller to buyer, seller to buyer, seller to buyer, buyer to seller, seller to buyer, seller to buyer, buyer to seller, right? So when we draw up on the pencil tool, a reversal, it's kind of like sharp movement, boom, 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 and then you reject off of a level. This level is the floor, right? So we want it to be red. We ain't even gonna do all of that. But would it been like this? This right here is a well setup. It's full momentum. If it was to curve under and then reclaim, that's an A plus setup. It's a little less momentum. And then if it was to just keep falling down, that's an F setup. That means we on the wrong side of the market. Bullish continuation. Bullish continuation isn't necessarily the second leg. Bullish continuation could also be just, it can be the 5th leg, the 10th leg, because it's not about it going up. Oh, it's going up, so it's an uptrend. It's about it coming back to retest the very first POIs. See, this is the first high, this is the first low. We have not been able to get above it. It's been noise. So it breaking above and it come back down to it, and now it's a floor. This is a ceiling that used to be a floor. That's a continuation, right? Bullish continuation. Boom, boom, boom. Look, we had this crazy drop. This is the bullish reversal right here. We're going to have another drop. And boom. Watch how buyers climb up. But it's like a staircase. It's much harder to climb up and it's much easier to fall. A downtrend takes precision, and the uptrend for a buy, it takes patience. So understanding that an uptrend is going to take time, it's like bulls are now climbing up a hill through a maze. They stepping upstairs. Remember, bulls have zero navigation skills. So a bullish continuation, it looks like this, right? We got an old ceiling, that's now a floor, right? Boom, boom. Now we say this is the floor and floor. We drop, 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 boom. Right here is the reversal, right here is the continuation. Now we are reversals for bearish. It's like bears jumping out the window. And like, imagine a bear going against gravity. It's gonna fall fast. Remember in school when you would hold something, it'd be something that's heavy, something that's not heavy, and you drop them both at the same time? Yeah. Bearish reversals it's like bears jumping out of windows. It happened faster than you can see. You almost gotta be a super scalper to be able to see that. For real. You got a 15-second charts. You're gonna have to see that. Boom, drop, drop, drop. And right here is a lot of fear, because it's not about how big the candle is or what the candle look like. It's where the candle closed. And this bullish candle would have scared a lot of people out because they simply don't understand market structure and they don't understand how candles interact with POIs, how candles interact with levels. Then boom. So we got this right here. When we drawing that reversal, it's like they jumped out the window. Now we on bullish continuation. They jumped out the window here. They've been just consolidating inside for a minute, still jumping out the window. But once they came back and they bounced off an old floor that we couldn't get below, and that's now a ceiling, they took the elevator down. Imagine a bear taking the elevator down. It happens so fast, you can't even think about it. How the edge pays. Fewer trades, cleaner entries, bigger moves, no shaky hands. Fewer trades, you're not looking at every single strategy you see because you lost today, somebody won today. Oh, let me do what they're doing. You know that your strategy works so well because you have so many reps with it of doing it systematically. Not how you feel, not what you think, not what the market been doing. And then you have cleaner entries because we only enter on hammer and gravestone candles. We enter on key levels. And when we enter like that, hammer and gravestones are whale type candles to enter on. Then you have more like bullish engulfings and morning star patterns. Those are more like our A+ trades to enter on, right? And then F setups has just completely been wiped out. Bigger moves, we catching 20x trades on 1 minute charts. And the daily could be choppy. Couldn't be going nowhere. The hour could be choppy. No shaky hands. We understand our Tao. There's no such thing as psych or risk. They're both the same thing. If you can control both of those by what you risk losing per trade, you won't have shaky hands. And if you can stick to doing the same thing every day, you won't have shaky hands. So when we draw this up here and we see, okay, boom, we have psych. This right here is the Dow. We have risk. If you control how much you risk per trade, then your risk management, as in like what you making and losing per trade, and your psych, as in how much mental capacity and energy you give per trade, will be even. But it's all about how much you risk. How much can you stomach? Same market positions, same confirmations, same risk rules, same management. Consistency compounds. Consistency, the snowball effect. Slow is fast, fast is slow. The edge rule, boom. If it doesn't fit the process, we don't take the trade. No-brainer trades only. If it doesn't make you say no duh, then you probably shouldn't be getting into that trade. Ouch. Close. The shift. Stick to the same thing long enough. Stick to the same thing long enough to see if it works for you. If it's not working for you, it's working on you. You deserve to not quit on yourself, and so does people like me willing to show one of my best systems with the world. Give this a chance. I know you won't regret it, because it is more important to not be a sore loser, because with this system, it's a 1 in 1,000% chance you will lose 10 times in a row, even 3 times in a row. See for yourself. Remember, journaling and taking reps only comes from doing the same thing, the same exact thing every single trade. Same market positions, same confirmations, same risk rules, what you looking for, TP and profit, and stop loss and loss. Same management. No different discretion. I'm going to add this on here. Notes needed. A coin has 3 sides. When you flip a coin, it lands on the edge first, and then it lands on heads or tails. Random probabilities, nothing is 50-50. It's just is. We can buy above highs and low levels, so we can sell below highs and low levels. When we look at levels, right, we can buy above this high and we can buy above this low. When we look at low levels, we can sell below this high and sell below the low. So that's where you hear the smart person say, hey, you want to be a good trader? Just buy low and sell high. But you can also buy high. You can also sell low. Because as a trader, you don't care if the market goes up or down. You just want it to move. Let's go deeper. Pick one market. Mark a horizontal line on a previous day candle. On a 5-minute time frame, circle every area that interacted with the levels. At least 20 POIs. You don't know until it's born. Understand it well enough. Let's go on everybody's favorite stock right now, which would be SpaceX. We already really marked off the daily. We redo it. Right? Previous day high and low. You know what? Do it right. I done probably redid this video a few times. So, yeah, just some info right there. Camera kept shutting off. I think we got it this time though. Boom. So now we head to the 5-minute chart. And we want to just find every area that interacted. Right? So, right here, it interacted. This right here, we know this first one is a bullish reversal. Boom, interacted. This one right here is a bullish reversal A+. This first one is a whale setup, so we make it blue, right? Whale setup is blue. It's a whale setup because it was like momentum confirmed, right? It didn't curl below. This one is an A+ because it curled below, right? Less momentum, but it still was a good trade for a buy. Boom. Right here, this is another well setup because this area rejected completely, right? Let's go up. Let's see if we can find an F setup. Boom. That's 3 already. Right here, this is a good one. This is more of a well setup too, because it was just full on momentum. All of these at the bottom are bullish reversals. This one at the top is a bearish continuation. The ones at the bottom, bullish reversals, as in it's going up, first leg. Then this is a bearish continuation because we see on this left side, it already dropped. It already dropped. This was the second leg. Boom. 1 leg, 2 leg. Right? So right here, we see, okay, well, we didn't have any more interactions. Boom. We get this interaction right here, all the way from the tippity top. This remind you more of a, this is more of like a, this is more of like a retest type trade, right? What I mean by retest type trade, it came down and retested right here, but it previously broke above, right? So if we was to sharpen this, we see right here, that's when the trade reversed. It's like a morning star, right? Evening star. So when we look at it being a 3-star pattern, we see, okay, without trying to make it smart, simple, it broke above, and when it broke above, it kind of curled, right? But it still came right back down. So this is more of an A setup area, right? It's less momentum, but momentum is there. And boom, we had this drop, then it came back. Boom, so that's 5. This right here is a well set up. This is a bullish reversal. Boom, we go up, up, up. This right here, this is a bullish reversal. This is the first bullish reversal. This is a well set up too. Perfect retest. Boom, boom, boom. We go up. We see, okay, next retest. This is another well set up bearish continuation. Boom. From this area here though, this is all more of a A+ setup. It's just not the best momentum, where you'll probably be having your stops all the way up here. This is the worst that can happen. And then it's like, okay, well, now this is the candle that broke below, right? And then somebody might also say, well, maybe this is like my middle zone or something like that. Boom. Let's keep going down. We see, okay, that's 6. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. Dang, 1, 2, 3, 4, 5, 6, 7, 8, 9. This area right here, this is more of a A+ setup too. This is an A+ setup. There's less momentum, right? We would probably have our stop down here for both of these trades. Just protecting the worst that can happen. Not really giving how I set my stop losses. I'm giving basic market structure. Boom. So if we come all the way over here, right? And we see the beginning of time for this stop. Boom, right here. That's an A+ setup because it curled under, right? Right here, A+ setup because it curled under. And then it just skyrocketed all the way up. Finding the F setup is not really, can't really find an F setup intentionally. An F setup would be if we were looking for a buy, but it decided to just drop down, right? And we already bought. We bought right here. If we bought right here and it don't keep going up, it just decided to drop down, and that right there is telling us, okay, that's an F setup. So F setup is based off entries. Boom. This whole area right here is all noise. So that's 1, 2, 3. It ain't really any more on this chart. We could drop down to the 1 minute. That was 9. We already found. See if we see any inside ones. Right? Boom. Look at this one. Boom. This is an A setup, right? Because it curled under. This right here is a well setup because it rejected right off. You see how we only care about candles that interact with levels? Boom. Up, up, up. Right? That's all just a well set up right there. Perfect rejections. That's right here. Both still well set up. We marked that up already. Oh, I make it even perfecter. Oh, we missed this one. Look at this. That's like a well set up, right? And then right here, we didn't get anything. Let's make it orange. It didn't come back and touch the level. Y'all look at the video. Everything we've been marking up, the levels were touched. It wasn't just like, oh, it came by it. Oh, that's good enough. We're not good enough traders. That's why every trade we get in seems perfect, because we do the same exact thing. You can't fake clean charts. You can't fake the clean chart. Let me see. Alright, let's go in here. We dang there like 15, right? Boom. That's a well set up. If that was a buy, this would be more of a A+ setup. Right here, it's like orange. It doesn't make sense, right? Remember, we just don't make sense. The A+ and a well setup, we don't mark up F setups unless we were just wrong on a trade, which would be putting more theory in this. Like, let's say right here, we decided to take a buy because we was breaking above, right? That would be a well setup for the buy. But let's say we was really dependent on the sell. So if we was dependent on the sell, well, this would make it an F setup right here, simply because we were wrong at that time being, right? It came back below where we entered. Boom, like right here. This is a pullback. This is not a retest. That's a trade we would have missed. Every trade that we've been marking up, everything has came back down to the level it went up. Like if we go back to the 5 minute, everything we marked up is on the level only. It's nowhere else but on the key level. Like besides this one, kind of showing how it went up but it didn't continue. Now it's even more cleaner. Sure.